Hello and welcome to its Muthu CA's Unlearn and Relearn series. From 1st April 2026, the new act is out. The new rules are also out. The new forms are also out. Now, with all these three being introduced, it is important to understand each chapter, each head in detail to know what is changing, how to approach it. So, in this episode, we are going to discuss about the salary chapter. We are going to discuss this in 4 phases. The first phase is, of course, about the structure. How is that structurally changed from the old laws to the new laws? And then we are going to understand how the provisions are revamped. We are going to interpret the new law with the new provisions, how it has changed from the old act. The third phase is about allowances. There are a lot of changes in allowances with respect to upgrading the exemptions. So that's something that we need to understand when it comes to salary. The last phase, that is the fourth phase, we are going to understand about the perquisites. This has also undergone a lot of changes with the new rules in place. Fifth is also going to be a bonus content, so please stay till the end. So I'm going to give you some more information about this chapter, which is about the salary. Okay, let's begin about the structure. So when we say structure, of course, it is important to understand how it has been transition from Act 2020 to Act 2025 from Act 1961. So if you actually look at it, salary was a very small chapter. It only had 3 sections, 15, 16, 17 in your Act 1961. Now this is slightly modified in the new Act 2025. The charging section, that is section 15, continues to be section 15 in Act 2025 also. The salary heads, that was divided into 3 categories, that was called as salary under 17.1, perquisites under 17.2, and profits in lieu of salary in 17.3. Now these 3 are retained as it is, but in 3 different sections: 16, 17, 18. So 16 will be salary, 17 will be perquisites, and 18 will be profits in lieu of salary. Now, coming to section 16 of Act 1961, which dealt with deductions, is now moved to section 19. Now, this section 19 is something very new, because there are some of the exemptions which are covered under section 10, say gratuity, leave travel encashment, pension. All of this is now covered under section 19. So it's no more a exemption, it is a deduction. So that's a shift that is being made in the new act from some of the sections of some of the clauses of section 10. Now, what about the rules? Rules 1962 is rules 2026. Now, what is changing here? What is changing with respect to the structure? Now, interestingly, the new rule numbers of salary is going to be 15 to 19. Sections is also 15 to 19. Rules is also 15 to 19. Now this 15 is about valuation of perquisites, which was earlier rule 3. And 16 was specified employee, like when do you call someone as a specified employee? That is in rule 3C earlier. And 19 was about gross total income that is required for medical expenses, specifically related to abroad expenses. That was 3D, now it is 19. And then approved hospitals for prescribed diseases for medical perquisites, which was earlier under 3A, is now 18. These are the rules there. Apart from this, relating to PF, anything related to annual accretion, on which you calculate the interest on the contribution in excess of 7.5 lakhs, that is now covered in rule 17. Earlier it was rule 3B. And there are 2 more things outside salary chapter, that is in section 10, which is section 10 13A on house rent allowance, which was discussed in rule 2A, is now in rule 279. The special allowances under section 10 clause 14 earlier, which is in rule 2BB, is now in rule 280. Now, when I first went through these rules, I was little surprised, because when you say rule 2A, the new rule should be somewhere around 3, 4 or something, right? But somewhere the number is 279 and 280. So I was little surprised. Then I come to know, when I went through the law, section 10, which deals with 1013A on house rent allowance and 1014 on special allowances, is now in section 11 in the new act. Now this section 11 is not discussed within the section like section 10. It is now discussed separately in schedule. So these house rent allowances and special allowances are discussed in schedule 3. So you know schedules, right? So it comes after all the sections. So after all the sections is available in the act, then comes the schedule. So considering this is relating to the schedule, it comes very late. So that is why it is 279 and 280. So that's the reason why it has a very late number, 279 and 280. Okay, now let's move on and understand how exactly the sections are overflowing in the new act and new rules. So the left side is what we are going to see. So we are going to understand section 15, 16, 17, 18 and 19. All these sections, all these 5 sections in the new act is going to be understood in detail. We are going to start with section 15, that is going to be your charging section, right? So that is which says that salary income is taxable on due or receipt basis, whichever is earlier. Now look at this. In Act 1961, section 15, subsection 1 and clause A reads as any salary due from an employer or a former employer to an assessee in the previous year, right? So note these two words, the former employer and previous year, whether paid or not. Now see how it is being overflown into Act 2025. Section 15, subsection 1, clause A, nothing has changed, saying any salary due from an employer, the word or a formal employer is missing, it's not there, to an assessee in the tax year. So previous year and assessment year is now combined as tax year in section 3. So the two words, a former employer, is not there in section 15.1. Similarly, the previous year is renamed as tax year. Previous year being renamed as tax year is understandable. Now we need to understand what has happened to this former employer. Now 15.1 has 3 limbs, A, B, C, that is clause A, clause B and clause C, which tells you about salary being taxed. Now every clause in that A, B, C has the word this former employer. Now what Income Tax Act 1961 becoming 2025 has done is, it has removed these former employer in the respective clauses and categorized it as 15 subsection 2. Now 15 subsection 2 says, for the purpose of subsection 1, employer includes former employer. So instead of repeating it 3 times in A, B and C, now they are repeating it only once, where they say that employer includes former employer. So now automatically for A, B and C, this word comes into play. So this is the play that has happened, the word play that has happened in this section 15.1, where nothing has changed, just that they have simplified it by removing the word former employer and separately identifying it under 15.2. That's the first thing that I wanted to let you know. And then look at this. We all know that explanations and provisos are not part of the new act. So what has happened? We say that lots of explanations and almost all the explanations and provisos are not there in the new act. This is what it is claimed, right? Technically, the explanations and provisos are not completely removed. It is just rephrased as subsections, clauses or note. Here, look at this. Explanation 1 to section 15 provides, for the removal of doubts, it is hereby declared that where, remember it's all in blue, so which means it's going to be removed in 2025. Any salary paid in advance is included in the total income of any person for any previous year. It shall not be included in gain again in the total income of the person when the salary becomes due. Very simple. Moment it is taxed on receipt basis, it should not be taxed again on due basis. This was provided as a clarification in explanation 1. Now in Act 2025, it is included as a subsection in 15.3. So 15 subsection 3 says, it does not include the word for removal of doubts because it's no more a clarification, it's a statement. No more a clarification, it's a statement. Now, so it directly enters into the subject. If any salary paid in advance is included in the total income of any person for any tax year, because there is no more previous year, so again the word tax year is used. It shall not be included again in the total income of such person, So what do you mean by of such person? Typically the word the is removed and such is included. What's the change? The person could mean one person, but this such person is very specific that the same person which has been referred in 15.1. So it has been more specific, more concise and more clear than the word the person. That's what the income tax department feels. So such person when the salary becomes due. So these are the simple changes that has happened in 15. Now there is one more explanation, explanation 2, which says remuneration or other things to the partner from a firm is not salary. This is also a clarification provided in explanation 2 to section 15. Now this clarification is hereafter a statement, hereafter a provision by itself. So that is provided in section 15 subsection 4, which states same thing, partner's remuneration or anything you name, whatever it's called, it is not a salary. It is not to be considered as a salary. So this is the revamp, how section 15 has been revamped in the new Act 2025. So hope that's clear. So now we will move on to the next category, section 16. Section 16 of Act 2025, not Act 1961, because Act 1961 section 16 is deductions. Now what we are going to see is section 16 of Act 2025, right? Which is the old 17.1. Now section 17 was divided into 3 categories. 1, salary, 2, perquisites, 3, profits in lieu of salary. Now 17.1 is considered under section 16. So income from salaries is now considered under section 16. Now what does it 16 says? Earlier in 17.1 it used to say for the purpose of section 15, 16 and this section salary includes. Right? So this is what was framed in the Act 1961. Now they are saying is for the purpose of this part. Right? Now what is part? Part is nothing but the heading which is there in your Act 1961. So chapter and then headings. Now you have chapter and then parts. So there is no more heading in the Act 2025. So for the purpose of this part. So what do you mean by this part? For section 15, 16, 17, 18 and 19, salary includes these. So instead of referring the section numbers, they are referring the whole part because now it's 5 sections. It's not simple. So instead of referring all the 5 sections, they have said of this part. So salary includes everything, wages, whatever was covered in section 17.1 is exactly covered in section 16 also. There is no change. The subtle change of wordplay again is basically earlier in section 17.1 the phrase any fees or commission or perquisite or profits in lieu of or in addition to any salary or wages. This was considered as one single line item, one single line item. Now in section 16, to have better clarity, to avoid confusion, they have now split this into 3. Anyways, it was 3 items only concatenated with or. So salary of any fees or commission or perquisites or profits in lieu of salary. Now it is covered as 3 distinct items. 3 distinct items. D is fees or commission, E is perquisites and F is profits in lieu of salary. So this is split in Act 2025 for better clarity again, for simplification. Rest all remains same. Everything else whatever is there in section 17.1 is there. Advance salary, leave salary, your PF related matters, your national pension scheme and your Agniveer corpus fund, all of them which is there listed in section 17.1 is also listed in section 16. There is no other change, no other change. So it is as it is, but for having a distinct and independent section under section 16. So now we will move to 17.2 of Act 1961, which is now section 17. Section 17 now deals exclusively with perquisites. We know perquisites is a very complex matter, like so there are a lot of items that are discussed under perquisites. So it was there a part of section 17, now it's an independent section, section 17. Now let's understand the wordplay or the change of section provisions in the new Act 2025. Act 1961 says 17.2.2, the value of any accommodation provided to the assessee by his employer at a concessional rate. Now what is 17.2.1? It is free. That is, it is completely free, rent-free accommodation, right? So that is what is covered under 17.2.1. Now what is 17 to 2? It says value of accommodation at a concessional rent. Then an explanation provides, for the purpose of this subclause, it is clarified that accommodation shall be deemed to have been provided at a concessional rate if the value of accommodation computed in such manner as may be prescribed, that is your rule 3, exceeds the rent recoverable from or payable by the assessee. So this explanation only tells you how to, when should something be called as a concessional and when should be something called as a rent-free accommodation. Now, Act 2025 combines this and makes it simple. Let's see what it is. The value of any accommodation computed in such manner, that is rule 15 right now. In rule 2026, income tax rules 2026, perquisite valuation is covered under rule 15. So computed in such manner as may be prescribed, provided to the assessee by his employer at a concessional rate which is in excess of rent recoverable from or payable to the assessee. So now the explanation and the clause is merged as 17(1)(b). So 17(1) lists all the perquisites. 17(1)(a) is your rent-free accommodation, similar to your 17(2)(1). Now 17(1)(b) is concessional rate. So nothing has changed, just the references. So 17(2)(2) is year after 17(1)(b). 17(2)(1) is year after 17(2)(a), 17(1)(a). This is what has changed, right? So it has been combined. So the clause 2 and explanation is combined in Act 2025. The meaning, the understanding, the interpretation remains same. There is no change. Now, one more beautiful change. One of the important objective of this new act or new rule is removing everything that is redundant, removing everything that is irrelevant. Now look at this. 17(2)(8) says the value of any other fringe benefit or amenity as may be prescribed is also a perquisite, right? There are a lot of things that is again listed in rule 3. Now, in Act 2025, the word is fringe is removed. Why? Because the word fringe referred to fringe benefit taxes under section 115W series, right? It all related to fringe benefit tax. That's the word fringe benefit. So the word fringe benefits is derived from section 115W series. Fringe benefit is abolished long back. It is no more valid. It is not at all there. Then why unnecessarily carry the word fringe alone? So the word benefit alone is used. So the fringe was removed. So the word benefit or amenity, there is no change. 17(2)(8) is now 17(1)(e). No other change. What has changed? The word, the term fringe is removed. So now it is just benefit. It is not fringe benefits. So that's a change. Again, what is the change? Because the fringe benefit is abolished, it is no more in place. To make it simple, to make it clear and concise, the word fringe is removed. So that's another change which has happened in section 17(1), in which perquisites are listed, right? Next, there are some of the items which are not treated as perquisites in accordance with section 17(1), first proviso. 17(1) proviso says these are all the items that are not treated as perquisites. We already said the word proviso is no more there. The word explanation is no more there. So proviso now becomes what? Subsection. So proviso has now become 17(2). So what are all the perquisites that are not treated as perquisites, which was discussed in proviso to section 17(1) is now discussed in section 17(2), a separate subsection to discuss all the list of perquisites which are not considered as perquisites. Now let's look at it. Medical treatment, where employer himself owns the hospital, which was there in clause 1 of proviso. Now it is 17(2)(a). Government hospital or prescribed disease, treatment in the government hospital or prescribed disease in approved hospital, which was there in 2, is now B, that is 17(2)(b). COVID-19, which is was there in 2019, and then probably there was this benefit given where whatever amount that you receive for treatment of COVID for the assessee or the family members of the assessee is not considered as a perquisite if you receive it from the employer. Similarly, there is a provision in income from other sources also, where it said that if it is received from any other person up to 10 lakhs, it was not considered as a income. So here, this COVID-19 is gone. We have all moved on. We have all come out of it. We are now living a life which is different, which was different 4-5 years before, right? So now this COVID-19 is no more in place because it's redundant. It's no more applicable. Today you cannot still go and say I was being treated for COVID. My employer paid. It must be considered as perquisite. So it's no more the case. So COVID-19 relevant provision is redundant and hence removed in your section 17.2. Medical employee approved scheme or your family or your employee family which is earlier covered under 80D. Now the new 80D is the new 126. So 80D is now section 126. Again, that was in proviso, fourth item of proviso. Now it is 17.2D. Outside India, that is medical treatment for outside India, was split into two clauses in proviso. 6 dealt with the employer spending for the employee. 7 dealt with the employee spending for himself and getting it reimbursed from the employer. So there are two different clauses for medical expenses outside India. Now this is combined as F. So it is combined because it doesn't matter whether employer reimburses or employer spends, the treatment is same. So even an additional condition which was attached to this employee expenditure is now not relevant, no more relevant. So now 17.2F gives you a combined clause of employer spend and employer reimbursing for the employee's expenditure for medical treatment outside India. So this is also covered here. So these are all the items which are not treated as perquisite, which are listed as proviso in 17.2 is now a separate section, 17 subsection 2 for dealing with it, right? Now, there is one more which is now added to this not treated as perquisites. Earlier, this was provided as an explanation in 17.3. Now, 17.3 explanation says, that is 17.2.3, right? 17.2 is your perquisites. In that third item says, any vehicle journey, that is residence to office or any office related place, and return journey, that is from the client place to your residence or from the office place to your residence, is not considered perquisite. So when you're using a vehicle exclusively for office travel, residence to office or resident to client place and return journey, now this is in 17.2e, covered in 17.2e. So explanation is now moved to 17.2e, right? 17.2e. So this is the change here. So not only your proviso that is covered under 17.2, also one explanation which dealt with similar understanding. What understanding? It is not a perquisite. Now this is also combined into 17.2. So 17.2 has 6 items A, B, C, D, E, F. Out of that, E was earlier part of an explanation, whereas A to F was considered part of your proviso to 17.2. So this is how they have combined and regrouped all the clauses relevant to not treated as perquisite is now in one single place. Which single place? Section 17 subsection 2 deals with all the items that are not treated as perquisites. Next, of course, we all know Income Tax Act throws definitions here and there. So here and there you will have definitions for the respective clause, for respective section or respective head of income, etc. Right now, in most of the cases, Income Tax Act 2025 has tried to simplify this by bringing all the definitions into one single place. So this is what is being basically tried here. So where these definitions, that is A, B, C, D, E, F, G, H, is all now listed in section 17 subsection 4. Section 17 subsection 4, where earlier it was thrown across different provisions. Fair market value was provided in explanation D of 17.26. Family was defined in explanation 2 of 17.2. Hospital explanation 1 of 17.2. Option explanation E of 17.26. Specified security, sweat equity, and your value of specified equity or sweat equity. All of this which is listed in separate places through explanation now is combined in one single place 17 subsection 4. So 17.4 now contains all the definitions that is relevant for perquisites under section 17. So that's what is about 17.4. So every definition is grouped in section 17.4. So that's another simplification that has happened within this section 17. So far within 17.2, that is perquisites, the new section 17, the only change is COVID-19 provisions, which is considered to be redundant, is removed. So otherwise, it's only reclassification, regrouping and simplification. There is nothing else that has happened in section 17, only one change. So the next one we are going to understand is profits in lieu of salary. Earlier covered under section 17.3 is now exclusively covered under section 18. Now in the 17.3.2 said that there are some items which will not be considered as profits in lieu of salary. Other than that, it will be considered as profits in lieu of salary. Now what are this exclusion list? Earlier in Act 1961, it included gratuity, pension, retrenchment, PF contribution, PF withdrawal, specified security, superannuation, house rent allowance. So any fund related to that is received by the employee will not be considered as bills because it will be separately considered elsewhere. But in Act 2025, this list of items does not include gratuity, pension and retrenchment. Why have they been removed from this existing list? Because gratuity, pension, leave encashment was earlier part of section 10. So since it was an exemption, it was considered as an exclusion list here in this list of items. But now, gratuity, pension and your retrenchment compensation is no more an exemption, it is a deduction. So anyway, it is not part of the other items which are listed under section 10, the new section 11. So these items are now part of new section 11. So thereby that continues here, whereas these three are deductions and not exemption. That is the reason why this has been excluded from the exclusion list. So that's the reason, right? So it is no more an exemption. Hence it is removed from this list. Okay. And the next one, the last section in salary is your section 19, that is deduction, which was earlier section 16. So the new section 19 is very interestingly structured. It is tabulated because one great thing about this Act 2025 is lot of items are tabulated. There are a lot of formulas. So it's kind of trying to make it easy for the assessee, for the consultants, for the chartered accountants and whoever is supposed to use this act. Now, this deduction, let's see how it is transitioned into this new section 19. In Act 1961, standard deduction was 16(1)(a), which is now in table serial number 2. And then you have entertainment allowance, which is in section 16(2). Now this is removed. Earlier, entertainment allowance was claimed as an exemption only for government employees. Now it is not for government employees also, which means the deduction is not there. It is taxable for all the employees. So that's a change. So entertainment allowance is not part of section 19. Then you have professional tax, which is in serial number 1. Gratuity, pension, retrenchment compensation, voluntary retirement and leave salary. All of this which was part of section 10 is now moved to section 19. So from exemption to deduction, we have been already talking about this. So it has been moved from exemption to deduction. So serial number 3 to 6 discusses about gratuity. Generally, when you talk about section 10.10 in gratuity, it is listed as 3 items, right? 3 types of gratuity exemption. One for death related, another specific employees, then covered under Gratuity Act, not covered under Gratuity Act. So these are the 4 items. Now these 4 items are covered in 3 to 6. So 3, 4, 5, 6 are listed for these 4 items. Then you have pension. Of course, you have pension exempt for government employees. Then you have commuted pension, and then you have uncommuted pension. These are discussed in 7, 8, 9. And then you have retrenchment compensation. Again, it is discussed in 10 and 11. Voluntary retirement scheme. It is discussed in 12. leave salary, which is now discussed in 13 and 14. So these are the 14 items which are in section 19 that talks about deductions with regarding to salary chapter. So all these deductions are covered in a tabulated manner. So all the conditions, that is for gratuity or for voluntary retirement, for everything there are some conditions attached to it. All these conditions are now listed in one particular place. It is all listed in 19.2. So 19.2 provides conditions for all these areas, from gratuity to your leave salary. For all these areas, it is listed in 19.2 conditions. So conditions are separately listed. It is not within gratuity, it is not within pension. It is separately listed in one single subsection, 19.2. Now, what is this table? How is it this table look like? The deduction table in section 19 looks like 3 columns: serial number, nature of sum, and amount of deduction. There are 3 columns to it. Now the first one talks about sum paid by the assessee as a tax on employment, that is your professional tax, which is the entire amount. One interesting thing about this professional tax is, when it says the entire amount is allowed as deduction, practically when we actually work out the client cases or problems or something, we take the number of 2,500. That is, professional tax is only allowed to the extent of 2,500. Whereas your word used in the income tax is entire amount. Then where does this 2,500 comes into picture? It's not listed in Income Tax Act. Where is it listed? It is listed in the Constitution of India. 276(2) says, of Constitution of India says, professional tax cannot be levied more than 2,500 per annum, which means there is a restriction on what can be levied. So to the extent it can be levied, only it is allowed. In case if it's something more than that, it is not considered. So that is what is there. Standard deduction, of course, it's a very common thing. 75,000 in default tax regime and 50,000 in the old regime. So the 202 is nothing but the equivalent section of 115 BAC. 115 BAC is your new regime. So 115 BAC is replacement in Act 2025 is section 202. So that's what it's talking about. And then you have gratuity, like let's say the third item was death cum retirement gratuity. So if the gratuity received in lieu of death, then the entire amount is allowed as deduction. So that is about your deduction table. So now we have completed the first 2 phases. We have understood the structure, we have understood how provisions are revamped into the new Act 2025. Now we are going to understand about allowances, which has undergone a big change. A lot of things have been modified to the recent trends. So especially things like children education allowance, which is just 100 per month per child for up to 2 children, is now 30 times multiplied to 3,000. So that is going to give you an additional benefit of 69,600. Same way with the hostel, it was only 300 per month per child up to 2 children. Now it has been increased to 9,000. So which is again 30 times. So which might give you an additional benefit of 2,08,800. Of course, these are only for old tax regime. These are not eligible for new tax regimes. The next is transport allowance. Transport allowance is only eligible for blind, deaf, dumb and orthopedically handicapped. Now this was at 3,200 per month. Now in Act 2025, this is being divided into 2 categories: 15,000 plus DA for metro cities, 8,000 plus DA for non-metro cities. So this might give you an extra benefit of 1,41,600 if you are in metro city. So that's also big benefit. Again, this is also allowed under new regime also. It's not only under old regime, this is also allowed under new regime. Employees in transport system, they are eligible to claim the benefit of 70% of such allowance or maximum of 10,000 per month. Now this 10,000 is increased to 25,000. This might again give you an extra benefit of 1,80,000. So there is a maximum benefit of up to 10,000. Now it has been increased to maximum benefit of 25,000. And then compensatory allowance per month for field area, which was 2,600 per month, now it has been increased to 13,500. So that's going to give you a benefit of 1,30,800. Modified field area allowance, which was only 1,000 per month, now it is 8,000, which is going to give you a benefit of additional benefit of 84,000. So these are all upgraded for all taxpayers. Now we are going to see some of them which are exclusively for armed forces. Counter-insurgency, which was 3,900 per month, is increased to 22,000 per month. So that's going to give you an extra of 2,17,200. Special allowance, depending upon the altitude, it ranged from 1,060, 1,600, 800, depending upon the altitude or location. Now it is being increased to 4,500, 7,000, and in fact, like places like Jammu and Kashmir, Ladakh, and Uttarakhand, it's going to be 30,000 per month. And then special compensatory field area allowance is 22,000. So these are all also undergoing a lot of changes where you get benefits like more benefits like 3.5 lakhs, 2 lakhs, and etc. If you actually look at one interesting thing here is the state named Uttarakhand. In the old Act 1961, lot of states were not there at that point in time, Jharkhand, Uttarakhand. So all of these were not there. So now in this Act 2025, when they have reformed this, they have included the relevant locations relating to the old state. They have correspondingly, they have updated to the new state. So earlier it would have been Uttar Pradesh, now it has been made to Uttarakhand. So there have been changes to this new geographical map of India. So that is something that has also been changed in this new Act 2025. Island allowance, again duty or special duty, Andaman, Lakshadweep, where you get per month. If you are in capital town, 3,250. If in CHN, then it is 7,000. Now here, it is now modified as a percentage of salary. So if you are in capital town, 10%, difficult area 16%, and then more difficult areas 20%. If you are in CHN, then you are going to get 42,500. So the next one is for others, that is other than all taxpayers and armed forces. There are something else also in allowances, which is basically exclusively for mine employees and underground allowance. This is also now modified in 15% basic. So the new rule 280 is giving you this as a basic salary proportion instead of a fixed monthly pay 800. Same way for tough locations, they are now divided into 3 categories. It ranges from 200 to 1,300. Depending upon the locations, you get 7,000, 4,500 or 1,500. And for scheduled tribal area, you get, it was only 200 earlier, now it has been increased to 1,500. So these are all the changes with respect to allowance. Allowances of special allowances, which was earlier in section 1014, now is part of section 11 and schedule 3. Now this is covered under rule 280, which lists all these items. Now we'll move on to section 10 clause 13a, which is on house rent allowances, which is basically earlier covered under section 10 clause 13a, read with rule 2a. Now it is section 11, which is part of schedule 3, table serial number 11 talks about house rent allowances, read with rule 279. So this is how you have to understand house rent allowances. It is predominantly same, least of the following: your actual HRA, actual amount received, your rent paid minus 10% of salary, and then your percentage of salary. Now what has changed in this percentage of salary is based on Finance Act 2026 requirement, based on the proposal made in Finance Act 2026, Rule 279 now includes 3 more cities, Hyderabad, Pune and Ahmedabad, to be covered under 50% category. So instead of only 4 of metro cities, that you are Delhi, Mumbai, Kolkata and Chennai, now you have 3 more cities. You have 3 more cities, which is your Hyderabad, Pune and Ahmedabad. So now all of them come under the 50% category. All other cities continue to remain at 40%. So this is again a big leap for employees residing in these major cities. So that's one advantage. So that is Rule 279. So now we'll move on to Rule 15, which is discussed on valuation of perquisites. The old Rule 3. So old Rule 3 is now Rule 15. So the table 2 of Rule 3 and now table 2 of Rule 15 talks about valuation of motor car. We are first going to understand what happens to motor car owned by employer. There's a big shift. So lot of new income being brought into. So if you are using a car for personal and official and the employer is spending for the car, employer's car, employer is spending, and the car's capacity is more than not more than 1.6 liters. Earlier it was 1,800 per month. Now it is 5,000 per month. So there is a big leap again. If it is more than 1.6 liter, earlier it was 2,400 per month. Now it is 7,000 per month. Similarly, if the expenditure is met by employee, employer car, employee spending. Earlier it was 600 per month for lower capacity. Now it is 2,000. For higher capacity, it was 900 per month. Now it is 3000. So everything has almost multiplied 3 times in the perquisite of car. So your income will be multiplied by 3 times when you are handling perquisite of car. And if you are having a driver, that is chauffeur, earlier it was only 900 per month. Now it is 3000 per month. So it means for a driver, you can claim you will be treated an income of 3000 per month in addition. If it is exclusively used for office use, it is not a perquisite. If it is exclusively for personal, running and maintenance expenditure plus chauffeur cost plus 10% on cost minus recovered. No change from the earlier rule 3. If the motor car is owned by employee, then if it is official use, it is not a perquisite. If it is fully personal also, it's not a perquisite. The only scenario when it will be a perquisite is only when it is used for both the purposes. So if the employer is using, employer is spending for the car. Employee's car, employer is spending. If the car's capacity is lower, it is actual expenditure minus earlier 1800. So now we are going to understand about motor car owned by employee. In fact, when a motor car is owned by employee, if it is official or personal, it is not at all a perquisite. But if it is used for both the purposes and the employer is spending, then again, depending upon the capacity of the car, it varies. Now earlier, the actual expenses minus 1800 was the perquisite. The capacity was less than or up to 1.6 liters. Now it is replaced with 5000 because that is how it has changed in the employer's car, where 1800 has become 5000. Same way, if it is more than 1.6 liter, the 2400 is now becoming 7000. So your actual expenditure minus this amount will be considered as your perquisite. So there is more benefit. If the car is owned by the employee, you get more benefit with respect to the new rules. And then you have any other automotive owned by the employee. Again, if it's official or personal, it is not a perquisite. If it is used for both, earlier it was actual expenses minus 900 per month. Now it is 3000 per month. Again, this has been an upgrade with respect to reduction. So you get benefited if you are having any other automotive which is provided, which is spent by the employer. So these are the changes to the motor car valuation from rule 3 to rule 15 from the table 2 of both old rule 1962 and rule 2026. Both have in the table 2. Now what about other perquisites that are undergone change? Earlier these perquisites were listed as clauses. So rule 3 had sub rule 3 to 7 which discuss various benefits, but now this rule 15 is providing this also in table. So table 3 and table 4 is providing perquisites of all other items. The valuation of perquisites with regarding to education facility, usually the cost is similar institution cost minus recovered, but it is only a perquisite only when it exceeds a particular amount. Earlier it was 1000 per month, now it is 3000 per month. If the school is owned by the employer or the school is giving an admission because of his employment. For these two reasons, earlier it was a perquisite if it exceeds 1000 per month. Now it is, if it is exceeding only 3000 per month. For every other education facility in any other school or something, it is default. That is your total expenditure minus recovered will be your total. And then interest-free concession loan for a very long time, which is not considered as a perquisite, was only up to 20,000 per month. Now this is multiplied 10 times and it is being made 2 lakhs. Usually for a perquisite on interest free or interest concession, where for 2 reasons it is not considered as a perquisite. One, it is obtained for a prescribed disease. Another, the loan value does not exceed 20,000. Now this 20,000 is becoming 2 lakhs. The other condition remains same, prescribed disease. And with respect to value of free food, there is something very beautifully happening here in this new rules. So earlier, this value of free food and non-alcoholic beverages was not a perquisite if per meal is not more than 50 rupees. So per meal is not more than 50 rupees. And this was eligible, this 50 rupees benefit was only under the old tax regime. It was not available in the new tax regime. The relevant proviso which spoke about this condition of saying that it is only eligible for old tax regime is not there in new rules. So rule 15 does not have this condition of only for OTR, which means now this value of free food benefit is now available for both old regime and new regime. It's a big benefit. And it's not 50 per meal, it is 200 per meal. So it's 4 times multiplied, 4x. So 200 per meal. So if I'm working for 22 days per meal, you get what? 4,400 per month, right? So this is a benefit which is 4 times multiplied from the earlier benefit. So that's another thing, is it is now eligible for both the regimes as per the wordings of the rules 2026. And gift from employer, for a very long time this was 5,000, now this is increased to 15,000. So if it is less than 5,000, it is not a perquisite. If it exceeds 5,000, it was a perquisite. Now this limit is 15,000, it is not 5,000, now it is being made to 15,000, right? I told you that there is one bonus content at the end of this, so we have come to that point. So I'm going to tell you various forms which you need to get adapted to, which you need to relearn from 1st April 2026. So tax deduction at salary, which was earlier under section 192, is going to be under section 392. PF withdrawal, TDS on PF withdrawal, which was under 192A, is also 392. There is some beautiful mergers happened in TDS provisions. Of course, I'll take that in another episode. So here we'll understand this combination of employees TDS alone. Salary TDS and PF TDS, both are now combined into section 392. With respect to forms, the TDS returns that you are filing for salary in 24Q is going to be form number 138. And the certificate after deduction in the year end, which you get in form 16 as an employee, will now be 130. So you will not get form 16, you will get form 130 from tax year 26-27. So for this year, that is the previous year 25-26, you will get form 16 only. You will not get the new form. From the next year, that is from tax year 26-27, you will get this new form. That is, you will get 130 instead of form 16. And as an employee, for you to understand what is your perquisite, what is your profits in lieu of salary, which was there in 12BA, will now be in 123. So this comes as an add-on with your form 16. So your form 16 will also include this. Now this is going to be 123. And the declaration that the employee gives and the deductions, everything that happens in 12B and 12BA is now combined as one form in 122. So all the income details and deduction details and what all you are eligible under the income tax, which was given in 2 different forms, is now combined into 122. So this is something that I need to give you some extra information on what is going to change from 1st April in the chapter of salary. So with this, I've covered all the changes that has happened in salary. I would like you to comment on these changes and the modern day upgrade. So everything has been brought to today's standards. So I want you to comment on that, and then also do not forget to subscribe for more such contents, and it's Muthu CA. Do share it with others so that this gets spread, to the knowledge gets spread. So it's important. So share the update. So with this, I'll wind up for this session. So thank you. So thank you from It's Muthu CA.